Good morning. Here is today's Korean economic news briefing. We begin with significant developments in Korea's economic policy and financial markets as the government responds to multiple challenges ranging from supply chain disruptions to cryptocurrency management concerns. Let me walk you through the key stories shaping Korea's economy today. Government responds to naphtha shortage with emergency measures. Deputy Prime Minister and Finance Minister Koo Yoon-chul announced today that the government will prioritize the supply of critical raw materials, particularly naphtha, to healthcare and essential consumer goods sectors. This comes as Korea faces a shortage crisis in petrochemical products, with 7 petrochemical byproducts designated as critical items. The government plans to ease the traditional 90-day public contract rule to expedite supplies to essential industries. This is a critical move because naphtha serves as a fundamental building block for numerous downstream industries, and any disruption could cascade through the entire manufacturing sector, affecting everything from pharmaceuticals to food production. Cracking down on cryptocurrency theft in public sector. In a more sobering development, the government revealed that public institutions including the prosecution, police, and National Tax Service are collectively holding 78 billion won in seized cryptocurrency. Unfortunately, repeated cases of cryptocurrency loss from these agencies have prompted emergency action. The government has established a comprehensive management system requiring immediate storage of seized digital assets in secure institutional cold wallets, which are offline storage systems providing maximum security. Violating these storage regulations will result in criminal charges and disciplinary measures. This reflects growing concerns about the safety and accountability of public asset management in the digital age. Emergency budget unveiled to support consumers. The government today approved a supplementary budget of 26.2 trillion won designed to support the bottom 70% of income earners with high oil price relief payments. Notably, this budget does not require new government bond issuance, as it utilizes surplus tax revenues collected beyond initial projections. The core objective is to prevent consumer sentiment from deteriorating further during this uncertain economic period. For the food and restaurant industries particularly, there's cautious optimism that this direct support to consumers could generate spillover benefits through increased dining and consumption. However, observers note this likely represents a short-term stimulus, as underlying challenges including raw material cost pressures and Middle East geopolitical risks persist. Monetary policy holds steady amid uncertainty. The Bank of Korea's Monetary Policy Committee unanimously voted to maintain the benchmark interest rate at 2.50% today. This marks the 7th consecutive rate freeze, demonstrating the central bank's cautious stance. Governor Lee Chong-yong, in his final policy meeting before retirement, indicated that Middle East developments remain the paramount variable affecting economic forecasting. The Bank of Korea now projects that inflation will be adjusted significantly upward from its previous 2.2% forecast due to elevated oil prices and elevated exchange rates resulting from ongoing Middle East tensions. Economic growth forecasts have also been trimmed, with the Bank of Korea expecting growth to fall below 2% this year, down from the February projection of 2%. Governor Lee characterized the current stagflation risk as relatively low but acknowledged the administration's supplementary budget supported by surplus revenues as a positive measure to sustain demand. Market sentiment shifts on ceasefire hopes. Financial markets responded positively to reports of a potential truce between the United States and Iran. The Kospi index rose 80.86 points, or 1.40%, closing at 5,858.87. Notably, foreign investors executed net purchases of approximately 1 trillion won, suggesting renewed confidence among international capital markets. The KOSDAQ also climbed more than 1%. Medical device and precision equipment stocks led the rally with gains exceeding 3.9%. Exchange rate pressures have eased somewhat, with the Korean won to dollar rate settling at 1,482.50, though it remains vulnerable to any escalation in Middle East tensions. Meanwhile, Korea's exchange-traded funds are approaching the psychologically significant 400 trillion won asset threshold, indicating domestic retail investors are returning to equity markets after periods of caution. Semiconductor sector shows mixed signals. Global semiconductor indices hit record highs as Nvidia and other chipmakers benefited from continued artificial intelligence demand. However, Korean retail investors have paradoxically sold approximately 9 trillion won worth of Korean semiconductor stocks, with Samsung Electronics and SK Hynix bearing the brunt of this selling pressure. This disconnect suggests some investors harbor skepticism about the sustainability of the semiconductor supercycle despite its impressive recent performance. Automobile industry intensifies China competition. Hyundai Motor Company and Tesla are simultaneously launching offensive strategies in China's electric vehicle market, recognizing that competing effectively in this massive consumer market is essential for global automotive leadership. China represents not just the world's largest automotive sales market but also the crucial battleground for electric vehicle dominance. Implications for investors and consumers. For everyday citizens, the $26 trillion supplementary budget provides meaningful relief from high oil prices that have cascaded into everything from food to transportation costs. However, this represents a temporary measure rather than a structural solution. Investors should note that while financial markets are gaining confidence following ceasefire reports, underlying economic headwinds persist. The Bank of Korea's cautious tone and downward growth revisions suggest slower expansion ahead. For equity investors, the semiconductor sector offers growth opportunities, particularly through globally focused companies benefiting from artificial intelligence infrastructure build-out, though valuations merit careful evaluation. The cryptocurrency management initiatives signal the government's commitment to preventing public sector losses, though the underlying volatility in digital assets suggests investors maintain appropriate risk management. Looking ahead, Middle East developments remain the dominant variable that could rapidly shift economic forecasts and financial market trajectories in either direction. This remains a highly uncertain environment requiring careful navigation. This concludes today's economic news briefing.